Good evening, everyone. I say a very big thank you to you all. So, today we're actually going to be sharing a very powerful. We are going to be doing a deep dive in price action, how you can do your top down analysis, how you can do your top down analysis. So, comment in the comment section wherever you are watching us from. Comment in the comment section wherever you are watching us from. Comment in the comment section where you are watching us from, your location and what your location and the time in where you are. In my Nigeria here, this is 8:30 p.m. So the live stream is going to be a very deep one. We are going to be having a question and answer at the end of it. We are going to be having a question and answer at the end of the class. So do well to watch the end. Mr. Steven, if you are on, let me have a live question. So one thing about the financial market is that today we are going to be doing a very deep dive why you have not been profitable in the financial market. Market structure remains the fundamental in the financial market. If you can't get this thing right, you can't be. You can't. If you can't get it right, you can never be profitable. And that is why no matter the strategy you are using, no matter the kind of trader that you are, your ability to get this thing right really goes a long way. And that is why you always have your strategy fails out. It will always fail out because you have not really done you've not done a perfection on it. And so tonight I'm actually going to be doing a deep dive on market structure. Right, market structure. So once you've established your market structure, the things you consider now, your POI can actually comes in place. Your POI can then comes in place, and every other thing can follow after your market structure. And one thing you know about the market structure is that market structure still remains king. And when you do your market structure, we always start from higher time frame. And once we be our daily time frame, it can be our weekly time frame, whichever one we choose to work with. But for you, if you actually want to have an effective one, then you must definitely start from your weekly time frame. From your weekly time frame. Then from your weekly time frame, you can look at the structure there, go down to your daily time frame, look at the structure there. But mind you, coming down to lower time frame, then that means what you refine on your higher time frame is actually what you are going to come and refine on your lower time frame. For example, now you've actually seen that on weekly time frame now you are on what? You are on. For example, now you've actually seen on weekly time frame now that you are actually in an uptrend. Then when you come down to a lower time frame that is a little bit lower than weekly time frame, which is your daily time frame, you still look at the structure on your daily time frame. Does it align with your former higher time frame, which is your weekly time frame? So once these things are aligned together, then definitely you are good to go. Then you can come down to another lower time frame, which is your 4 hours time frame. Then one important thing in the market is that before you start doing your top down analysis, you must know the kind of personality, the personality of your trading. Your personality in the sense that which kind of trader are you? Are you a scalper? Are you a long time trader? Are you a day trader? Or you are an intraday trader? or you are a swing trader, the moment you establish the personality of trading that you want to, then you cannot define, what? Then you can define the you, then you can define then you can actually define what? Then you can define what you need to do, right? So you can either be a scalper, right? Then as a scalper now, you consider what? As a scalper now, I'll actually be basing the class on an intraday trader and as a scalper, because majority of we new traders or majority of traders now are intraday trader, because we are always anxious. We are always in the market looking for our daily $2, our daily $10, our daily $100, just to meet up with our day in day out responsibility or bills. So we can't go below that time frame. We are going to be what? I'm going to be concentrating more on the scalping side of it, and what? An intraday trader, right? I'm actually going to be what? To be focusing more on that. So as an intraday trader now, as an intraday trader, as an intraday trader, okay. So as an intraday trader now, you consider what? You use your what? As an intraday trader now, we use what? Our daily time frame. We use our daily time frame, which is our D1, or and our H4, right? Our H4. We use our daily time frame. We use our what? We use our H4, right? Then we use our what? Our H1. We use our H1 together with our what? Then our M15. With our M15. So on our M15 now, M15 is where we actually take our what? That is where we take our entry, right? So as a scalper now, I'll be working with crash 1000. I'll work with crash 1000. I'll actually be working with crash 1000 so that we can actually do a deep down. We can do a deep down on it. We can do a deep down on it. So we can do a deep down on it. So don't forget that I said I'll be working mostly with what? With the scalping side of it. So this is crash 1000 now. So on our crash 1000 now, we're actually on the daily time frame. Let me delete everything that I have here. Then we can have a what? You can have a pure chart, a plain chart. So this is crash 1000. We are what? We are on our daily time frame. So looking at this now, you can actually check your trend with two things. If you look at very well now, for those of you that are very conversant with what? With trend line, right? You can actually say this is a downtrend. But these are the things you get. These are where you start getting frustrated now. Looking at this now, you see that we are actually in a downtrend with our trend line, but there are more to it. Trend line is not actually a standalone methodology or indicator. Let me put it that way. Trend line cannot stand alone on its own. Trend line cannot start alone on its own. There are things you need to apply to it now. So looking at this now, we're actually in a downtrend from our trend line. But there's one major thing I want you to now focus on. If you go through this now, you will see that we have our what? We have our what? If you go through this now, you see that we did have our what? We have our what? We have our higher high. Coming from here now, let me start from here. We have our what? We have our lower high. We have our lower low here, right? We have our lower low here. Then we have another lower high here. We have a what? We have a lower low, but this lower low that we have here is actually not a lower low because it did not break the former structure that we have here. Right? It didn't break the former structure that we have here. So we can't call it a lower low. And the former high that we have was actually this. This is the former lower high that we have. So whatever that you have in between here now is what we call is what we call our internal structure. Because one thing with market structure is that there's what we call external structure and internal structure. Whatever structure that you have on your higher time frame will always be your external structure, and it stand fit to be the what, to be the most authentic structure that you have, that no matter what you have in the market will always respect it. Market will always respect it. That no matter what you have in the market will always respect it. And that is why we always tell you that higher time frame is king. Higher time frame is king. Like higher time frame is king. So let me do a practical deal of it. So one thing I do tell my students is that the moment you go to your higher time frame, the first thing you need to do is that you need to mark out your range, right? You mark out your range. And if you're marking out your range now, look at this now. Look at this now. So you bring out your horizontal line or arrow, whichever one you have. This is the most recent one. So this is our what? This is this is our lower high, right? And then we now have this as our what? As our lower low. Because this is the one, we now have this as our lower low, right? So if you actually in a downtrend, so whatever we have here, right? Whatever we have in between here is what we call our internal structure, right? So long market does not break this higher high, right? This is our high here. We are what? We are in the downtrend. No matter how long it takes to get there, no matter how long it takes, we are still in a downtrend. So the moment you can establish this, right? So that is basically what you'll be doing on your what? On your higher time frame. That is basically what you'll be doing on higher time frame. So you mark out your range. This is the what? This is the recent lower high that we have. And this is the recent lower low that we have. So long, let me label it out. So this is our lower low. So this is our lower low. This is our lower low, right? We have it as our lower low, lower high. Sorry.